The hidden dangers of economic stimulus. Are you prepared for the financial reset? Imagine stepping out of your favorite Sunday morning cafe, the aroma of fresh coffee still lingering. You unfold the latest financial newspaper and a bold headline hits you like a punch. U.S. government announces $20 billion stimulus package to boost growth. Looking up, you see crowds lining up to buy gold, real estate, and cars. Online, people are shouting, money is being pumped in. Grab your chance to get rich. But if you're truly alert, you might sense that something is off. When society celebrates the influx of money, the wise don't join the party. Instead, they ask, where is this money flowing? Who's accumulating assets? Who stands to gain and who might lose? The million-dollar question isn't about how you'll spend the stimulus money, but rather, what's your strategy as the system prepares for a new game? You might believe that stimulus packages are designed for the people to aid recovery after a turbulent year. But if you've witnessed the 2008 financial crisis, the 2020 pandemic fallout, or the 2022 asset bubbles, you'd understand that stimulus often marks the beginning of a news cycle, one with winners and losers. Stimulus isn't the fruit, it's the signal. A signal that the game is being reset. While you're busy hunting for discount vouchers to spend your money, others are using the same funds to acquire assets you'll find unaffordable in the next 5 years. They don't ask for prices, they ask for locations. They don't seek news, they seek the market's weakest moments. I saw this in 2009 when the U.S. launched stimulus measures post-financial crisis and the stock market soared for 5 years. But not everyone got rich. Those who spent because they felt saved lost everything. Those who held onto their money, understanding timing, doubled their assets with a single acquisition when others were fleeing. Does this sound familiar? Now interest rates are dropping, spending is increasing, gold is heating up, and the real estate market is buzzing. The crowd is diving in. But the savvy don't chase trends. They step back, observe, and wait for the market's most vulnerable moment. The question is, which role are you playing in this scenario? Are you the one lining up to spend, or the one strategizing alone? Injecting money isn't wrong, nor is easing policies. But believing that everyone benefits is a mistake. Not everyone knows where the money will flow. If you don't understand the direction of the money stream, you're merely part of a manipulated backdrop. Your mindset now determines your financial fate for the next 5 years. A smart investor during a stimulus phase never spends immediately. They ask, who's receiving the injected funds? Which assets are being supported? Which bubbles are inflating, and how can I avoid being the last buyer? You might think, like I do, that holding on to money leads to devaluation while investing carries risks. But the issue isn't the asset, it's your ability to read cycles and choose the right position. Now is the time to rethink everything. Don't let the crowd's excitement distract you from the truth. Every macroeconomic policy has a hidden layer, and the wealthy are those who can read it. You don't need to be rich to be alert. You just need to stay awake while the market sets the table. Not everyone at the table gets to eat. Some are there just to pay the bill. If you don't plan now, you'll be footing the bill for a feast you didn't order. Imagine standing atop a high tower, looking down at the chaotic flow of the economy. People are rushing, hoarding gold, investing in stocks as if the world will change tomorrow. But you don't follow, you observe. Because a wise investor doesn't step into the stream without knowing where it leads. Currently, Vietnam is in a unique period. The GDP is projected to grow by 6.8% in 2025. At first glance, this seems like a good sign, a light at the end of a long tunnel after a period of economic contraction. But don't celebrate just yet. A GDP figure doesn't tell the whole story. It's like measuring your blood pressure and finding it normal, while cancer cells silently grow inside. You might think that when the government loosens monetary policy and injects stimulus, people will have more opportunities, and businesses will breathe easier. That's true, but look closely at who gets access to that money first. It's not you, it's the crony enterprises, organizations capable of absorbing large capital, especially institutions within the inner circle of the credit system. Currently, inflation is reported to be controlled at 3.5 to 3.8% according to official reports. But if you walk into a supermarket, you'll see prices of cooking oil, eggs, and milk quietly rising. What does this indicate? That the real cost of living is increasing faster than reported figures. If you base your personal financial planning on a 3.8% inflation rate, you're playing chess with your eyes closed. The unemployment rate is said to be low, around 2.3%. But if you visit a cafe each morning, you'll notice more people taking temporary breaks from work, switching to freelance jobs, or selling online just to get by. This suggests that the unemployment figures don't accurately reflect job quality. Consequently, the silent frustration in society is higher than ever. Suppose you're an investor looking to enter during a stimulus phase, you might think it's time to buy. But hold on. Just because money is being injected doesn't mean everything will rise. The real question is, where is the money going? Currently, public investment is being strongly dispersed into infrastructure, airports, seaports, and highways. This signals that the government is paving the way for FDI and the global supply chain shift. In this complex economic landscape, the key isn't just to act, but to act wisely. Understand the signals, read between the lines, and position yourself strategically. The game is being reset. Make sure you're not just a player, but a winner. Remember, in the world of finance, knowledge isn't just power, it's profit. In the previous part, we explored a critical question. Are you positioned to receive the incoming flow of money, or are you merely watching it pass by, catching only the lingering warmth it leaves behind? Now, let's dig deeper, because understanding where you stand is only the beginning. The real challenge is how you think in moments like this. You see, this isn't about keeping up with others or trying to act faster than the crowd. It's about thinking ahead of the policy curve. Because money on its own doesn't create wealth, it's your position within the value distribution system that determines how much of that money becomes yours. A smart investor doesn't rush to buy early. They buy at the right time. And that right time isn't when the market is glowing green and full of noise. It's when the signs are clear enough to stop reacting on instinct and start executing based on strategy. We're standing at a major turning point. The government is stimulating the economy. Monetary policy is easing. And the money? It's looking for direction. But if you don't yet have a plan, if you haven't analyzed where the capital will flow, which sectors will benefit, or which regions are positioned to ride the wave, then your next investment is little more than throwing a rock into a flooded river, hoping it'll strike gold. Being woke in this market doesn't mean panicking. It means pausing, observing, listening, collecting the facts, and redrawing your investment plan with the mindset of someone who refuses to be swept up by the herd. Because in this phase of economic revival, only those who can read the bloodstream of macroeconomics will survive and even thrive during these monetary surges. Have you noticed? Every time the government announces a stimulus package, it's like injecting adrenaline into the market. Stocks jump. Real estate buzzes. News headlines explode with terms like recovery, aggressive measures, and positive signals. But here's the real question: who truly profits first from those signals? Let's say you've got $200 million sitting in your account. You see interest rates dropping. The media is full of optimism about the real estate market bouncing back. You're tempted. Maybe now's the time to jump in before you miss out. But flip that thought for a second. If you were the one controlling the money, what kind of narrative would you create to convince people to pour their real cash into your game? Because economic stimulus isn't just an economic act, it's psychological theater on a national scale. It doesn't just pump liquidity, it pumps expectation. And that expectation is the raw fuel that drives the crowd to channel money exactly where the big players have already set up camp. So what do the wealthy do when they hear about money printing and stimulus? They don't wait for confirmation from the headlines. They act before the news trickles down to the masses. While you're still weighing whether to buy a house or park your money in a savings account, they're quietly snapping up suburban land, accumulating essential industry stocks, or preparing IPOs for companies about to enjoy short-term growth momentum. What does this tell us? That good news might be a buy signal for you, but for the real players, it's already a point of exit. You've probably seen this movie before. An empty plot of land in the outskirts, ignored for years, suddenly becomes hot property after news breaks of a highway or airport project. Land prices double overnight. Everyone rushes in thinking they've struck gold. But who's selling at that moment? The ones who bought in 2 years ago when nobody cared. The ones who quietly secured their position while everyone else hesitated. Now they're cashing out and you're the liquidity. That's why you need to stop looking at the market like a consumer. Start seeing it like a distributor. A consumer sees a low price and thinks bargain. A distributor sees profit margin. A consumer sees the now. A distributor was already thinking 3 quarters ahead. Let's say you have $500 million VND in idle capital. With falling interest rates and liquidity flowing, what would you do? Someone with limited knowledge might say, stocks are rising. Real estate is heating up. I should get in fast. But a smart investor will pause and ask, where is the money going first? Who is influencing public sentiment right now? And am I joining a feast that's already half-eaten? Because let's be honest, manipulators don't shout the truth. They send out blurry signals and let you draw the wrong conclusions. They won't tell you to buy in. They'll just pay the media to whisper that confidence has returned, and you'll think it was your idea to act. Here's a rule of thumb. If the good news has already made the front page, the opportunity has likely passed. Early movers are prepared. Late movers react to the news and get played. A smart investor knows when to sit still while the crowd gets excited. They accumulate quietly while others are unloading in fear. And most importantly, they never believe that opportunity only knocks once. Instead, they create opportunity through observation, patience, and emotionless decision-making. In the end, you have two choices: be a pawn in someone else's game, or learn to read the map that the rich are using. But to do that, you must stop thinking like a buyer and start thinking like a builder of wealth. Because if you're still waiting for headlines to tell you what to do next, chances are the next move has already been made by someone else far ahead of you. Continuing from the last page, where we explored how real opportunities often hide in silence while the crowd chases noise, let's now step deeper into the heart of market psychology, where perception becomes more dangerous than reality. Imagine you're standing in the middle of a chaotic marketplace. Money is flying everywhere, people are waving bills, shouting orders, scrambling to grab what they believe are golden tickets to wealth. One rushes to buy land. Another races to get a luxury car. Somewhere nearby, you glance around and feel the pressure building. If I don't do something now, you think, I'll be left behind. But wait, have you ever paused for a breath, even for a moment, and asked yourself, where is all this money coming from? Who decides where it flows, where it pools, and when it gets pulled back? Because here's the truth. Every stimulus is not just an economic response. It's a behavioral experiment. People aren't being lulled to sleep. No, they're being jolted awake with the wrong kind of energy. It's like giving a tired driver a shot of adrenaline. They're not rested, just artificially alert. Consumers spend as if there's no tomorrow. Investors scoop up assets as if inflation will swallow every dollar by sunrise. But ask yourself, when the crowd is buying blindly, who is quietly selling in the background? That's the kind of question smart investors ask. It's not about what to buy, it's about who's selling and why. Because the greatest risk isn't a market crash, it's a collapse in perception. Recessions don't start with numbers, they start with irrational excitement disguised as optimism. Think back to 2008. The world was drunk on the promise of ever-rising real estate prices. Then Lehman Brothers fell like the first domino and everything came crashing down. People didn't lose because they had no money. They lost because they put their money in the wrong place at the wrong time. Now imagine you hear news that the government is cutting taxes, increasing public spending, and loosening fiscal policy. The crowd hears this and stampedes toward construction stocks, real estate plays, and building materials. But you, if you're thinking clearly, you pause and ask, who bought land 6 months ago? Who loaded up on stocks before the media began shouting about recovery? If everyone knows, is it still an opportunity? Real chances aren't found where it's bright and loud. They hide in cold corners, in whispers, in silence. When the majority rushes into assets on the back of policy headlines, the minority watches liquidity, inflation, and exchange rates, those subtle undercurrents that reveal the true state of things. Because if we can't control how money flows, we're inviting a familiar danger: asset bubbles, runaway inflation, and ultimately a painful recession. Money alone doesn't create value. Real value comes from production. And when asset prices skyrocket without real output, it's like a feast with no food, just empty plates and hungry mouths. If you see yourself as an investor, remember this: real opportunity is visible only to those who look with a long-term map, not a short-term magnifying glass. So when the money taps are turned on, don't chase. Observe. Accumulate. And don't fear a market crash. Fear having no plan when the crash comes. Because wisdom in investing isn't about making the fastest decision, it's about making the right one, especially when the crowd begins to stagger. Here's a sobering truth: you can build wealth even during a downturn if you're already standing on dry land before the flood arrives. So what should you do? Move toward assets that can defend themselves: physical gold, strong foreign currencies, or businesses with real cash flow. Avoid high leverage. Be wary of loud voices. And never spend money just because you have it. Spend because it fits into a strategy. At the end of the day, people don't go broke from lack of opportunity. They go broke from failing to recognize opportunity as it quietly slips past, disguised in the noise of temporary euphoria. Imagine standing in front of a house that's on fire. The doors are wide open. There's a party inside. People are rushing in, lured by lights and laughter. But you see the cracks in the foundation. You smell the smoke. What do? You could follow the crowd. Or you could step back, watch, and wait. Because next door, there's a quiet house, unnoticed, undervalued. That's where real value lives, waiting for those with the patience to knock. Even as society celebrates stimulus, lower interest rates, and easier loans, the real investors, the long-game players, stay quiet. Not because they're afraid, because they're thinking several moves ahead. They know. Macroeconomic easing isn't a green light to buy recklessly, it's a cue to restructure how they think about assets. This isn't the old game anymore. In 2025, markets don't behave like they used to. Interest rates may fall, but asset values are drifting out of sync with real purchasing power. Liquidity is being sucked into artificial hotspots. And if you're leveraging into those speculative waves, you're gambling your future not like an investor, but like someone drunk on momentum. So what's your survival strategy in all this? First, rethink your portfolio, not just your assets, but your beliefs about them. There's no such thing as an absolutely safe asset anymore. Stop asking, what should I buy? Start asking, what should I hold onto when things go south? I often tell my students to hold gold, not because its price will surge, but because gold compresses time. In a crisis, what you need isn't a win, it's time. Strong currencies aren't for profit. They're your exit route in a system that might flip overnight. Invest in long-term plays, productive land, companies that generate real income. Don't park yourself in flashy promises, plant seeds where real things grow. That's how you know you're on the right path. You're not just chasing returns, you're preserving resilience. Because the winning strategy isn't waiting for the lowest interest rate, it's keeping a cool head when everyone else is overheating. Let's say you're holding $1 billion. You might be tempted to divide it evenly, some into stocks, some into gold, some into real estate. But be careful. That kind of thinking reveals a lack of strategy. Instead, look deeper. Which assets are truly recovering? Which are just media hype? Which have real internal liquidity? Ask yourself, which ones are surviving on collective hope, and which have substance underneath? Now is not the time to triple your assets. It's the time to defend your core value while others lose 30%. Because when the market rebounds, you want to be at the starting line while everyone else is still cleaning up their losses. Avoid hot money leverage, speculative flipping, or credit-based investing with unclear fundamentals. Don't invest because a headline says golden opportunity. Invest because you know what you're buying and why the seller is letting go. Your survival playbook should include real-use assets, productive land, dividend-generating stocks. Keep some cash to seize discounts when panic hits. Only use leverage if you have 2 exit routes. If not, don't step in. And above all, invest in yourself. Study macroeconomics. Understand policy mechanics. Don't rely on trendy influencers or the next viral financial tip. Because here's the truth, a wise investor doesn't try to outrun the market, they go deeper than everyone else. When others chase profits, you should chase understanding. Once you know where the money is headed, luck becomes irrelevant. In the end, those who get excited by stimulus without preparation are like soldiers charging into battle without training only to ask later, why did we fall? That's why I say, markets may turn, but clarity must turn first. So next time you're sitting in a morning cafe, reading headlines about stimulus, lower interest rates, and a booming market, listen carefully to the conversations around you. A civil servant might be planning to buy suburban land. An online seller might be proud of a recent gold purchase. You don't need to argue. Just smile quietly. Because deep down, you know, the moment everyone thinks they're making the right choice is often the moment they're being led by emotion, not reason. Do you think like them? If so, this is your chance to pause, not to doubt, but to reposition yourself on the new financial map. Because in a world of easy money, not everyone will rise. Only those who prepared early will catch the wind. And remember, when money feels cheap, risk feels cheap too. But risk doesn't disappear, it only hides and waits for the unprepared. Here is your translated and rewritten content in English with an engaging, natural storytelling tone, preserving the original meaning and enhancing flow. What does this all tell us? That opportunity is often just a shadow cast by those who already have a strategy. For those lacking knowledge, what appears to be a golden opportunity is often just a well-wrapped trap packaged with polished media language and trendy headlines. So ask yourself, do you think and act with intention, or are you simply reacting? Are you chasing the news, or are you seeing the next wave before it forms? A smart investor never asks, what should I buy right now? Instead, they ask, what kind of psychology is the market running on today? That's why they don't buy into trends, eh? They position themselves based on context. Imagine you're a bird. You don't need the wind to fly, you need a map. And in today's economy, that financial map is only readable by those who truly understand the terrain. The sharpest investors aren't swayed by market excitement. They track the real flow of money, the silent, steady pulse beneath all the noise. So, what drives your decisions? Are you buying out of fear of missing out? Or are you investing because you truly understand the rules of the game? Because in an economy full of policies, incentives, and short-term hype, the investor without a plan will eventually be swept away by someone else's strategy. You probably feel the same way I do. No one wants to be just a pawn in someone else's game. So don't act like one. It's time to choose your side. Will you be the one who reacts? Or the one who anticipates? Will you be the one who wakes up? Or the one who blindly follows until your account hits rock bottom and only then realizes you were misled from the very first move? And if you've made it this far into the video, let me leave you with one final thought, one that has stayed with me for over 20 years of investing. People don't go broke because they make bad investments. They go broke because they don't realize whose rules they're playing by. So pause. Redraw your financial map. Because the macro landscape is opening up, money is getting cheaper, but your time to act with clarity is quickly running out. So what's your plan? If you're still listening now, I believe one thing. You're genuinely ready to take your financial future seriously. And since time is limited, I'll end the video here. I always share free insights on success, wealth-building events, business strategies, and investing to help you move closer to financial freedom. If even just 1 or 2 sentences in today's video helped you think differently or live better, that's enough to make it worthwhile for me. Thank you for watching. Don't forget to subscribe to the channel and save this playlist for easier access.